Hi, good evening, everyone. We'll go live. Hi, Niranjan. Hi, Vignesh. Hi, Janaki, RSP. Thank you, team creator. I hope you can all hear me. Hi, Sadhana Amar. We'll go live in the next 30 seconds. Yeah, I know it will be a good session, and I'm sure we are going to. I'm expecting a lot of questions on something that is happening in the North Pole. So hopefully, whenever you have questions, please feel free to ask me because these are different kind of a situation, difficult kind of a situation. But yeah, I'll try and answer all your questions as much as possible and try to convince as much as possible. Please feel free to ask me questions. And it is important to know while we are focusing on that, we need to know what our very own Mr. Rakesh Junjanwala did. So I'm sure Sadhana, your political situation is an important thing. No, you please keep asking me questions, and I because this will help me to scan through and then answer questions. That'll be good. If you keep the flow on, all of you, please feel free to ask me questions throughout the session. So without further ado, we are at 6:31, 1 minute past the scheduled time. Great. So let's start, and I'm just going to test my screen. If you can see it, just let me know. Once I share, I'll just switch ones, and then it'll be good. So can you see the screen? Very great. Okay, why? So thank you again, and all of you for joining me today for this amazing session on our very own Warren Buffett of India, the big bull of India, Mr. Rakesh Junjanwala, who needs no introduction, of course, because I think at least I dreamt about meeting him or at least seeing him live. Fortunately, I could meet him in person at in one of the events that I had gone for. We spent good 15 minutes together. It was electrifying. While I'm not going to talk about that experience today, I'm going to talk about what I have learned from Mr. Rakesh Junjanwala, who's a trader, who's an investor, who's a venture capitalist, who's a private equity person, and more, and also a philanthropist. I'm sure you know what he has done with his wealth. Great. Let me start with a important statement that he made when some journalist asked him about Harshad Mehta and 1992 and and what would have happened to him. So if you actually could very clearly read through, he said he would have gone bankrupt if the scam had continued for just one more month. I wanted to start this presentation on an important note that you or your views about a certain things can be right, but doesn't mean that it will come true at the right time, at the time that you want to. Even a person like Rakesh Junjunwala, who became a good large investor by 1992, could have gone bankrupt because he was trading his views well ahead of time. Timing, therefore, is extremely difficult. I will tell you why. Before that, let me tell you some brief introduction or give you a brief introduction about the man himself. He started off with 5,000 in 1986, rupees 5,000, a qualified chartered accountant in a middle class family, supported by his family and also his brother. He started with rupees 5,000 only, but in 3, 4, 5 decades, today he's worth about 40,000 crores. This presentation is not about how 5,000 became 40,000. It is about what he didn't do because of which he became where he is today. Some journey as to how he traded in the initial days. If you could see, while he started off in 1985, he did a couple of trades. In 1986 was when he achieved his first big achievement of Tata Tea. He invested about 5,000 shares of Tata Tea, made about 5 lakh of profits in 1986. Okay, by the way, this was on borrowed money. He borrowed for the once and the last time from his brother and his group of friends. In 1989, again, he bet big on the budget. He said the budget is going to be very investor friendly and Fortunately, it turned out to be so. His net worth jumped 8 times between 1986 to 1989 to 40 crores. 40 crores in 1989. But again, his view on what the budget will be turned out to be correct. Between this and 1989, he bought Tata Power when the entire world was betting against it. It gave him 25 lakhs of profits, right? And after the budget, he invested in a company called Sesago, which is a very famous story. He bought that for 25 rupees, 25 per share, sold at 60, 150, and also 2,200. Yes, the 15 price went to 2,200. And finally, when I mean finally, at least in the richest story, his biggest investment till date is buying Titan at an adjusted price of 3. No, he didn't buy it at 3 then. It is right now adjusted after stock splits, bonuses, and all that stuff to rupees 3. And that one investment itself, after 20 years, is worth 11,000 crores in his portfolio. So Titan continues to be his biggest portfolio. I'll share his portfolio also a little later. But yes, that continues to be his biggest portfolio. Yes, markets, and you can't start the presentation without having Mr. Peter Lynch say something about the market or the psychology of market itself. Markets inherently will go down from time to time. There is no system to avoid bad markets. Nobody has ever cracked how to avoid bad markets. But you can try and do it if you know how to time it. But that is seriously a dumb thing to do, says the legendary investor and the partner of Mr. Warren Buffett, Charlie Munger himself. Essentially, I'm trying to say that it's not just Rakesh Jhunjhunwala, but also the senior legendary leaders like Charlie Munger saying, don't try to time the market. Don't try to avoid bad months. That is not going to yield you any kind of result. There are two issues with that. One, your timing has to be right. Second, even if your timing is right and the market cracked, you have to take a decision on when to invest. That is psychologically a very difficult decision, because when the markets are cracking, it is never easy to find out when to invest. It's a very, very difficult psychological decision. Let's hear from Mr. Rakesh Jhunjhunwala on trading as a part of your income or as a part of your lifestyle. But before that, I'll just switch once to see if there are any questions till now for the kind of presentation that I've made till now. So about the question on Ukraine and Russia, I'm sure I'm going to talk about that. Okay, investing in these companies, invest or rational. Okay, wonderful. I'll talk about Russia and Ukraine. I was sure that there's going to be a lot of questions around that. Logic of buying those companies, fundamental analysis, I've covered those in my earlier episodes. I am on YouTube, I am on LinkedIn. Please feel free to go and join my YouTube channel. You'll see all these live streams that I've done. I've recorded them, and it will help you to figure out what should you actually look at before buying a certain stock. Okay, over to Rakesh Jhunjhunwala.
Out of 1 million traders, only 90 or 100 really make money. What's on this TV? Targets. What are targets? Who can predict anything? See, when I buy a stock, there comes a level at which I also feel that the price is unreasonable. But at that moment, I'm alert. That unreasonableness has to be combined with technical weakness. Then only is the move exhausted. If I have to do a trade, so I buy XYZ stock at 100 and it goes to 120 and I buy more, no money. By the time it is 90, it will be all squared up. And sometimes when the market is against me, I have money up till 915. And 945, it's squared off, you're fine. It's not that every year I made money. Mm-hmm. I've made it in sports, right? And I've made it in certain periods, 89 to 92, 2003 to 2007, 2009, 10, 11 has been a good year.
So as you can see, he clearly mentions that you should be in a position to accept that you can make mistakes. Don't try to time the market. Don't try to have targets in your mind. Don't try to hold on or trade ever. It's not going to be profitable all the time. Only about 10 or 90 or 100 people in a million make money. So he's always made money in sports. This is about his trading style, right? Why did I get this here? Is trying to tell you the psychology behind trading, which is a lot of people, youngsters like you, do. So I thought, why don't I just ask Mr. Rakesh Jhunjhunwala himself to speak about trading? So what I'm trying to say here is, if you're wrong, right, please try to cut your losses as quickly as possible. Everyone has bad year, everyone has bad trades. Great. So let's now focus on what has been his recent transaction, just to show that he is also gone wrong. He also makes adjustments to his portfolio. Nothing is like you buy and hold forever. You buy and hold till the time the company that you've invested in continues to exit your plan, their plan properly. So it's buy, hold till the time they execute, buy, hold, and exit this day the management stops executing. It's as simple as that. And that can be seen with what has happened in the recent transactions. If you see, he's increased stakes in few companies, he's decreased stakes in companies that are not or may not be doing well for his portfolio. Maybe a little, but he keeps doing this. This is try to say that he's portfolio reallocation, distribution of risk. These are the kind of things every legendary investors do it. We don't have an access to it, but here I am trying to present it so that you can see what kind of transactions even Mr. Rakesh Jhunjhunwala does. Let me also try and show you his top 5-10 holdings. As I said, okay, for some reason, Titan is here at 11,000 crores is his highest holding, followed by the recently listed, but not a very profitable IPO, Star Health. In fact, in one of the interviews, he has clearly mentioned that of all the companies that he has invested in the late stage, only about 50% have gone right, 50% have gone wrong. So he can also, and you can also have wrong transactions. It is all about cutting when you are wrong. So these are the two major holdings. If you could actually see, Titan, of course, continues to be big, and Star Health, followed by Metro. This is a company that he had invested in the pre-IPO levels, and Tata Motors, of course, because of the recent run-up that it has seen. So these are his major holdings. Okay, I've spoken about something like a successful stories of Mr. Rakesh Jhunjhunwala, but you will understand that he can also go wrong if I tell you where all has he gone wrong. So what are his failed trades? This reflects that even he can get his market timing wrong. Even he can make losses. So if he can make losses and get his market timing wrong, who are we not to get our market timing right or wrong, right? So these are his 5 major loss-making transactions. Nobody can forget the kind of money that he has lost in DHFL. It's tons of money. I tried figuring out the number, but it worked out to anywhere over 400, 500 crores or so, but I don't have a proper data to say. Delta Corp is a company that is into casinos. Maybe it was not his fault, but the casino industry went kaput because of COVID. And even today, he continues to lose substantially in the transaction that he has taken in Delta Corp. Mandana Retail is a company that was the marketing partner or the owners of the Being Human brand. He lost about 40, 50 crores in that. He lost about 70% of his investment in that company. VIP Industries, he has lost, or either he has lost his capital or lost a bit of his earnings that he made in this company, and so was MCX. So he also is subjected to failures. He also gets his market timing wrong. When I mean timing, not about just buying at the right time, buying the companies was also going wrong for him. So it's not just about timing, it's about timing the right buy and the right time. In both these cases, he has gone wrong. So why you shouldn't time? This is a very, very powerful, simple, very, very easy tool to understand. This is some data that we all fund distributors get every now and then. I'm just going to share one screen and you will get it all right. Let me just share you the most important slide of this entire presentation. This shows, let's say you're invested in Sensex, only Sensex, 15 years back. Okay. The source is Value Research. You had invested in Sensex 15 years back. If you had stayed invested, that 1 lakh rupees that you had invested 15 years back would work out to 5,02,340 as of yesterday, after the market crash. 5 lakh rupees for the 1 lakh investment that you made. Let's assume that you know how to time the market. Okay, you got some events right, you got some events wrong. I was absolutely zapped with the results that we got in 2009 when Congress came to power in the central election. No one was expecting, and the market zoomed up opened up, gap up, and it was like 20% upper circuit. You wouldn't see those kind of markets these days. On the other side, you had 2008 when the market was down circuit. You were not seeing it because you're newer to it. So when it happened, let's assume that you took a view that it'll be a hunger, and not just you, it was not your fault. Every investor at that point in time was talking about hung assembly, and all that stuff. But boom, the results were out of the world. 2009, it opened up 20% upper circuit. Just assume that you missed that transaction and missed 5 of the best of the transactions in the last 15 years. Your invested value of 1 lakh would have only become 3 lakh rupees. In the sense, just 5 days of missing would have led to close to about 2 lakhs of 22 times or 2 lakhs of unrealized profits. Similarly, if you had missed 10 days, 2,31,000 is your portfolio value as against 5 lakhs. If you had missed 15, 1,75,000, and if you missed 20 best days of the market in the last 15 years, you would have made 1,35,000. Why is it important? Because people say that, okay, markets are overvalued, I will exit and I'll enter back when it is undervalued. It is never possible to do that correctly twice. So even if you get it right, so for example, I manage a lot of money for investors, right? They always say, why didn't you exit in November when the markets were overvalued? I wish I had known how it will perform in January, or I wish I had known Russia will attack Ukraine and all this stuff. Unfortunately, I don't know all these, and I don't think anybody, even Putin, had planned it in November, right? So that is where these issues come in. And instead of thinking of avoiding losses, if in your mind, you are saying that I'm in it for good term, and I know that markets aren't bound to correct, like what Mr. Munger said. And you will see 5% down days, 10% up days, and all that stuff in your portfolio. Then, even without doing anything, inaction is also an action. Inaction is also an action. Please remember, I've had a lot of arguments with my clients on this. But yes, they want action. But I tell them, no, you don't need to take an action. So even if you don't do anything, you're better off, because just by mistake, if you miss 1, 2, or 3 important days, see the value of the portfolio. That's the reason why we say that don't try to time the market. Instead, try to be in the market. Try to spend a lot of time in the market by investing. Don't try to say buy high, buy low, sell low, all those concepts and all this stuff, right? Decreases by, see, your portfolio value decreases by 74%. Please remember. And again, I always want to end with some very positive note on India, right? Why should you invest in India? And again, don't try to time the market. Let's hear it from Rakesh of 1992 Scam.
मार्केट अगले 20-25 सालों में 35-40 साल तक जाएगा। ए भाई नहीं, सही बोल रहा हूँ, टाइम है पुल बनने का, पैर बन के मूंगफली खाने का टाइम गया। अगर मेरा दाव सही रहा ना, क्या पता अगला भी पुल मैं बन जाऊँ।
And there he became the big bull, because he took a view of 25 years, saying the markets can go up by 25 to about 25,000, right? So that's the reason why it is important not to time the market, but be in the market. Spend a lot of time in the market, go through the ups and downs, and I'm very, very sure you will come out as a better investor. Your portfolio value will be far better. Wonderful. I end my presentation here. Very sweet, very small, very short, I'm sure. Great. You can please pour in your question. I'm very happy to answer questions on Ukraine and Russia for whatever knowledge I've had. I've had a lot of arguments already with my partners, with my investment head and all that. Let's see if I could convince you. How are the markets? So simple. How are the markets going to be affected by Ukraine and Russia? The events there will definitely have an impact on the Indian markets. Not so much so because there is economically something will change. It is primarily because we are the largest importer of crude. And when crude grows up, India's GDP numbers tend to come down. For every $10 increase, I think there's an impact of about 0.4%, if I'm not wrong. So GDP growth will definitely have an impact, and that's the bigger worry. It's like, I mean, whatever little I've understood, it is like India versus Pakistan fighting over India, POK, which became very bad. So will the global market worry about India versus Pakistan? Not really. So we may not be really worried about it, but yes, Someone who is importing a lot of stuff from me should be worried, because if I get into those ban zones and all this stuff. So it's too political to talk about. I don't understand those bits, but I'm very sure that crude will play a crucial role, leading to inflation, leading to reduced GDP growth, leading to interest rate hikes. So this can push the recovery, which is already in the nascent stage after COVID, by a little, maybe 3 months or 6 months or so. That's going to be the impact in my assessment. All I'm trying to do in this time is any which way, which we always do, is exit overvalued assets and enter into undervalued assets. If I see value, for example, today, I believe Sensex will be at about 22 PE or 21 forward earning PE. At 21 PE, why will I not invest into the market? So I'm going to add new money into it over a period of time, but I'm going to be very specific on where my money will go. I'm going to go where there is undervaluation and not overvaluation. One, I'm going to go into those sectors which will not be affected by inflation. So that is my point number 2. So you have to be a little more choosy. What I foresee is a year like 2018-19 that we saw, where index went up because of 5-10 stocks going up, remaining 40 stocks remained stable or went down. So you have to be picky and choosy about stocks, and making money was initially getting difficult after the brilliant run that we saw. And I feel that the same is going to happen even now. Yes, Sadhana. So buying and holding and execution is an important one. Please look for execution. If the fund manager or your stock or your owner, the company's management is not executing, exit the stock. Janaki, I've covered that extensively in one of my presentations. Please look at it. There are many factors, but the thing is, one simple thing is try to invest or in those companies where your core competence is, where you understand the business also as much as possible. Of course, it is not always possible. If you don't know how to do it, take the help of good advisors. There are many around. Niranjan, actually, you don't have to do anything different. Exit overvalued assets, exit overvalued market caps, and enter into undervalued market caps and undervalued segments. It is irrespective of the fact that if there is a India-China or Ukraine-Russia or any countries warring of Fed hikes happening, any event will not affect this if you do your portfolio allocation correctly and keep rebalancing at regular intervals also. These are not special times. These are times because markets has to go through all this. Instead of worrying too much, if you keep doing diligently, you or your investment manager does this diligently, the excesses of reallocation, active management, I think, you will not find a situation like this. You'll not be worried too much about a situation like this. Vivan, nice question. Am I selling in this market? Absolutely not. Let it wipe off my gains. I've seen my portfolios gain down by a good 12%, 13%, or maybe a little around that level or so. But it is a part and parcel, right? So there's something called anchoring bias. Stop looking at your portfolio. So I'll tell you, you may want to answer this question also. Let's say you invested 100. It went to 200 in 2 years, which is like doubling your money, and came down to 150 in 2 years. Are you happy or sad? Are you happy or sad? You invested at 100, went to 200, now it has come down to 150. Are you happy or sad? Can someone answer this question? Okay, nobody's watching me. I'm sad. Of course, Vignesh, you're sad because you saw 200 going down to 150, right? But the actual way of looking is, actual way of looking is, you're investing into the market to make 15, maybe 16 or 18% return. That's a brilliant return to have. You have made 50% return in 2 years. You have made 50% return in 2 years. That's brilliant. It's like 23, 24% CAGR, IRR. In 2 years, you made 50%. Of course, it went to 200, but came down to 150. But net, you've beaten your own expectation, right? What I'm trying to say here is that there's something called anchoring bias. When we see portfolios going up, let's say it was at 200, you got anchored to it. No, you should not get anchored to higher values. Get your anchor to the lower value. Invested value is more important, not where it went. It will always come down. Never in no market, it's not an FD where it'll keep on going up linearly. It's a market. This is how it is. It's like an ECG graph, goes up and down. If it doesn't go and if it is flat, it means the market is dead. You want to have that kind of situation? No. So don't get anchored to a value. Like what Vivan brilliantly asked me, with the market crashing, gains being wiped off, gains being lower, I am absolutely awesome because I'm doing SIPs. I had set aside some money out. I have reduced my holdings in overvalued asset classes, overvalued investments. So today I'm in a better position. I'll use those investments to flow back, and my SIPs are anyways running. So I'm not worried too much about it. Yeah, so Sadhana very brilliantly said, it's all about minimizing, because this is like swimming in a high tide. You will go down, you will come up, and all that stuff. It is going to happen. You cannot avoid it. You've already fallen into the sea of equity. Enjoy the ride is what I'm going to say. It'll go up and go down, go up and go down. All you need to make sure is you have the good gears, life gears, to save yourself tomorrow, and also going into the right water. Don't go take too much of a risk by going in when there's a red flag. Try to go when there is a green flag. So it's as simple as that. Very brilliantly said. What went wrong with DHFL investment? So DHFL, DHFL, to long story short, they were doing something called asset liability mismatch. ALM is what it is called. They were borrowing at, using long-term monies to pay or lend for short-term, and that created a bit of a mismatch. And when ILFS defaulted, the money market dried up, led to DHFL's policy of doing this becoming worse off, ended up shutting the company in altogether. And there were some scams also in between is what we hear. So this is in brief about DHFL. I thought it was not about timing, but about fraud. Yeah. So what I'm saying is timing is not just about when to buy. Timing is also about what to buy. You may also buy wrong company. That is also timing, right? The other thing is, let's say you want to buy EV. For all you know, you may be wrong about EV for some time before it takes off. So that is also bad timing. So you just have to be a little more smarter, have a little longer horizon, do your research, and don't try to always say that, okay, I put in today, the market has to go up from tomorrow. Yesterday my wife and I, the market was crashing, and I told her, you had this spare money, why don't you invest? She said, okay, let me invest, and I bought her my favorite stock. And in the morning, yesterday it was down after I bought it. Though I bought it near the lows, but it was still down. She was like, why did you invest when it was going down? I invested because it's going to, expecting it to go up, not tomorrow, but over a period of time. But she was like, you should have invested in those stocks that would have gone up tomorrow. Fortunately, it happened today. It's not that I've exited, but I'm just trying to say that the day you invest doesn't make that it'll be the lowest of the 52-week or the next couple of years. For all you know, it can come crashing 20% from there. So don't try to time in any case. Yes, RSP, missing days means, let's assume that's, sorry, I'm new to investing, so not able to follow. Absolutely fine, RSP. So missing days is, let's say, when people try to time the market, they say that, okay, there's a big event happening like election results. March 10th is UP election results in India, right? They will say, I know that something bad is going to happen to the market. BJP is going to lose, or some government is going to form, and that may lead to a big fall in the market. So let me try and exit the market a day before and then enter after the market has fallen. मतलब आपको पता है कि market कल गिरने वाला है, ये आपको लगता है. But for all, this is what your view is, and so you exited on March 9th. The results came on March 10th, and let's assume that it was not UP election but Indian election. On March 10th, the results were so astoundingly good that market jumped up by 20%. Because you're not there, you missed those 20%. Correct? And it never came down. It kept on going up. So आपने ये जो 20% miss कर दिया. So you exited here. The market came up 20% above. And now, after missing this 20%, you said, okay, my view was wrong. I entered here. But you already have missed the most important 20% return. So these are the best day. This is called missing those best 5 or 10 or 15 or 20 days where you got the biggest presentation. Thank you. From LinkedIn, someone has messaged me, great presentation. Thank you. Yes, I really like if you guys like it. Hi, Asta. Thanks, Vignesh. What are your top picks from now? I don't do stocks. I do mutual funds. I mean, I don't recommend stocks. I do it in my own personal portfolio. I do mutual funds. I do set of PMSs and all this stuff. My top pick, okay, while I can't talk about top picks, I can always say that I have exited slowly some bit of small caps where we made good chunk of money. I'm getting into mid caps and in large caps. And अभी जो market गिरा है इसके बाद तो कोई it's a no-brainer to invest in good large cap companies because they are themselves correcting so badly. उसमें डालोगे 1-2 साल में तो आपको अच्छा पैसा मिल जाएगा. Remember March 20 में भी लोगों को यही लगता होगा कि और नीचे जाएगा. कोविड जब हुआ था उसके बाद आपको पता है क्या हुआ, right? So don't try to listen to too many people. Don't switch on that TV. I don't switch on the TV. I don't listen to what is happening in Russia and Ukraine. कि वो कितने इंच चला गया सिटी में, कौन सा बिल्डिंग बॉम्ब हो गया, all that stuff. Don't try to go so much into it. अपने इन्वेस्ट कर दिया आपने, अच्छा ही होगा if you're invested in good companies. So concentrate on good sectors, good market caps, and if you don't know how to manage money or how to analyze stocks, just give it off to mutual fund guys. They should do your job. On which portal? There are many. I like Trendline. So in this, the results I had shown you, it was Trendline. I look at money control. I don't do too much of stocks. I do more of my research on value research, Morningstar for mutual funds, and I have my own ways of doing. So I look at something called rolling returns, which helps me to see the consistency of a fund manager. We look at various rolling returns. I also have my own algorithms to figure out what is expensive, what is cheap. This is out of 19 years of experience. I've built those algorithms, machine learning that I'm doing. This is the machine. I'm talking about my own machine that I'm doing. So I'm trying to improvise. I'm doing this on stocks, market caps, and all this stuff. It helps us not to time the market, but just to make sure that I'm not paying too much of a price for the growth I'm expecting. So those are the kind of tools we use. Niranjan, don't worry about the markets. Absolutely don't worry about the market. This is it is reassuring, I hope, really. But all I'm trying to say is that markets will calm down, market will go up, one day 5%, one day 3%, and all this stuff. It is going to be very volatile, at least till the next, if not more, by about 20-25 days. And then things will be always back to where EPS growth is, earnings per share growth is, or return on equity is high. I'll share one chart. 1 second, guys. 1 second. I'll share something which I made for my investors. Because you're asking and you're worried, let me share that with you guys also. We are all worried about India, China. We are all worried about Russia, a country in the North Pole. Let's worry about India, no? Abhi India ke saath bhi to hua tha. India or you want to see my chart? If you can say yes to see if anyone is interested in seeing an important data. Okay. Cool. So see here, guys. So, chalo, देखो, Ukraine में, Russia में क्या होता है? That may affect us or may not affect us. But if we go with war with any country, we will definitely be affected. Correct? Do you agree to that? Even if you don't agree, you have to agree because it is pertaining to our own countries, right? I looked at the last 2 incidents of India-China skirmishes. I have used the word skirmishes if you see here. Primarily because it was not a war. थोड़ा बहुत नोक-झोंक हुआ था. फिर Galvan Valley में जब यहाँ पे हुआ था, firing हुआ, there was some killing and all this stuff, which was very bad. But this is where Doklam happened. There was a standoff, this one, that one. So if you see, the immediate reactions were all down, negative, and all this stuff, right? If you see here, right? But after the standoff was over, or even before that, the market started going up, primarily because they saw that this is fine, but at the end of the day, the company that I'm investing has to make money, not Doklam. Will the Doklam standoff affect my company is a question that you have to answer. And if not, you started investing into the markets. And there was an EPS growth that led to the markets moving up. So it was a fake move, primarily because there was no EPS growth. So you thought so, but then it didn't happen. So the markets didn't move majorly after Doklam. But Galvan में जब firing हुआ था, after that, the market shot up even after the standoff, primarily because everybody started seeing big revenue growth or EPS growth. That led to the market shooting up big time. Not just because COVID hit hua tha, but also because they saw EPS growth. So if you see current EPS growth, this is as of, I did it last week, right? Current EPS is right now about 777. Our P is less than 23 or 22 today. The last calendar year return when this happened in 2017 was 28%. Doklam hone ke baad bhi 28% we made. In 2020, when Galvan happened, our returns are positive 16%. See, that's why I'm showing you a chart. The EPS growth has been 10% every year. So all I'm trying to say is that what matters is EPS growth. What are the kind of companies that you're investing? How badly it will get affected, or it will not have any impact. That is more important, right? So this is all you should concentrate on. Doklam, China, India, Pakistan, Russia, Ukraine, Fed. Events so zindagi mein hote rahenge. There will be hundreds of events happening, but please be assured that if you have invested in the right company, India is going on the right growth path. If not 8.5, we will grow at 8%. If not 8%, we'll grow at 9%. Whatever it is, India is on the right path. Okay. So I think instead of worrying too much about what will that affect, it may get affected. I'm sure, as I said, crude oil will be a major factor. Invest karo, shut it, fill it, shut it, keep watching very actively. And then if you leave it without timing, you will have a brilliant return on your portfolio at the end of 3 years, 5 years. You're here, I'm here, I'll keep coming here. You should ask me questions. I will answer all those questions and guide you through this process. By the way, tomorrow at 11 o'clock, we have an interesting Wealth School webinar. If you guys want to attend, you can click, on my profile, on LinkedIn profile or a Wealth School profile and connect with me there also. Good luck, guys. Yes, RSP, I really like you. If you could come, ask me questions, it helps me to also be inspired to come and also answer your questions, and I help you as much as possible. Good luck to all of you. Thank you for coming in, and I really appreciate your time, and have a good weekend. Don't worry about the markets. Enjoy. We're all going to make a lot of money. Good luck.